When we pit a finite player versus a finite player, the system is stable. Football is stable. When we pit an infinite player versus an infinite player, the system is also stable. The Cold War was stable because we could not have a winner or a loser. And what ends up happening is the players play until one drops out because they lack the resources or the will to continue to play. They run out of the will and resources. The game continues with them or without them. The player just leaves the game, right? Problems arise, however, when you pit a finite player versus an infinite player. Because one is playing to win, and the other is playing to keep playing. And they make profoundly different strategic choices, which ultimately results in the finite player finding themselves in quagmire, running through will and resources trying to win. And this is what happened to the United States in Vietnam. It's not so much that the Americans lost the Vietnam War, it's that they were fighting the wrong game. Because the Americans were trying to beat the North Vietnamese, where the North Vietnamese were fighting for their lives. And a very different set of strategic choices was made, and invariably the United States will find themselves in quagmire and ran out of the will or the resources to play. They didn't lose, they dropped out of the game, right? So now this gets me thinking about other contexts in the world in which we live, business, politics, even education, right? Which is, what game are we playing, right? There's no such thing as winning business. There's no such thing as winning global politics. And there's definitely no such thing as winning education. But if we listen to the language of too many organizations, they don't know the game they're in. They talk about being the best. They talk about being number one. They talk about beating their competition. The problem is, there's no such thing. And any metrics that we choose, whether it's a ranking in a magazine that has made arbitrary choices about how to rank your universities and colleges, you had no say, or one university that declares itself number one in X and another one that declares themselves in Y, we haven't agreed upon the time frames or the metrics. In other words, it's all smoke and mirrors, right? Which means if you're playing by those rules, it's becoming more and more difficult to maintain the resources to stay in the game. Money is becoming more difficult. It's becoming what seems to be the primary objective, which it never was. And even the will of the people to commit their blood, sweat, and tears to see that your organization advances into the future. In other words, the staff, the teacher, even the students. It becomes more
What is up, guys?
and more difficult.
What is up? Starting us off with some Simon Sinek, really explaining what, the infinite games are. And, a lot of people get into trading and, they're playing the Fight Night game. And the game that you generally should be playing is the infinite games. And what the infinite games give you is the longevity, time, mindset, right? Not time, but mindset, right? Longevity mindset in understanding winning isn't reaching a finish line, but winning is doing your daily routine. Winning is winning by the day, right? Winning is by staying in the game. And generally that's what, the infinite games are, guys. So welcome to Market Overview. Another beautiful Wednesday to be able to spend it with y'all. I'm super grateful. And before I get into this session, right, I want to ask a couple of y'all maybe what's something that you've been struggling with, what's something that you still don't understand, what's something that you're trying to perfect or master in, if that's your entries, stop loss. And today, we don't have Jack with us, right? But it is his birthday, so if you haven't said happy birthday, go shoot him a text, tell him happy birthday to the man. But my goal today is to walk you through my step-by-step game plan when it comes to looking for a setup and how I personally look for a setup, right? So what we're gonna do we're gonna overview what we went over on Sunday Night Live. Starting with this incredible setup that I called out, right? A couple of y'all took it, right? We had gold right here, right? As you can see, gold pushed up, had a big institutional move back, entry right here, absolute snipe, called it out on the Powerhouse chat. If you also go on Sunday Night Live, pre-recorded the video, I caught it on there, as well as Bitcoin is floating in profits. Right now, it's not crazy profits, but it's in profits. Honestly, I'm not liking the structure of how it's moving. Um, Not what I would want to see. Like it's holding, it hasn't created new lows and it hasn't created new highs, but we are bullish. So I'm gonna be patient. I'm gonna be very aware. I might break even and look for a re-entry. Um, SPX, right? SPX, we have that huge movement up. As you can see, same thing with NAS, right? Movements up since last week. Since Sunday, movements up, right? Other than that, I personally haven't been in any trades but the gold trade. Um, Silver, oh my, did that touch? Is it close? Ooh, very, very close. This was a silver trade called out as well on Sunday Night Live. I'm just overviewing y'all with them. Um, Absolute barely touched it. I wouldn't even have entered that. I would have waited. But great setup, right? US Oil, it did smash our stop loss, right? Hit, came back a little bit, but trade didn't go our way. Now, something we do have right now is US Oil at our entry area, right? I had a oil sell here in the 70 area. Stop loss a little above 70.556. So great setup. I like the setup. It's an active sell for US Oil. So far, 1L, 2 wins with Bitcoin and gold, 3 wins and silver, right? Didn't give out, oh, yes, I did, right? We gave out GA, beautiful, beautiful rejection, right? Boom, break structure, change direction, came back in our area, tapped our 786, rejected, gave us a 1 or 2, and then dropped, right? So trade, that's 3 out of 1, 3 wins, 1 loss, right? Another one right here, right? GBP CHF, another win. So that's 4 wins, 1 loss for the week. You see GBP CAD just didn't come back up, right? USD CAD, we missed it by a bit. Oh well, we move on to the next one, right? USD, New Zealand, right? Beautiful snipe, right? Break the structure. We have our institutional move down, come back, rejected. That's at least a 1 or 2. Came back again, rejected. So, that's 5. And we're just overviewing them right now, right? I just want to show y'all what we were able to do this week, right? And then now I'm gonna delete everything, or most of everything. But as you can see, right, 5 out of 6 trades smacked this week. Now the whole goal is for you to understand what is going on, right? Well, my scenario when it comes to trading, right? It's levels and smart money, right? What I want y'all to understand, there's actually no right way in trading, right? There's no right way to trade. There's no 100% accuracy strategy that you can enter and just win every trade, right? We're in a markets of probabilities, and we're just taking our chances from the information that we have, including your strategy, right? So what I understood for me that took me the longest to really comprehend was, well, and I think a lot of people suffer in this when they get started. Well, am I looking for a buy or am I looking for a sell? Right? And the best way to overcome that, right, and understanding that is very simple, right? It's through market structure, right? Market structure is going to be very, very key when it comes to trading, right? A lot of traders lose money not because they don't understand the strategy, but because they make little mistakes and sometimes they don't follow their strategy to the end, right? So a lot of these traders that are losing, right, which is 95% of people, right, are losing because they just don't have emotional awareness, right, of following the plan. They don't follow their plan. They think they know it all, right? Their ego gets ahead of them, right? That's really why you're losing, right? That's genuinely why you're losing. So market structure, right? What is market structure? Market structure is identifying the trend of the market, right? Identifying the trend of the market. So very simple, right? And for those that don't know what market structure is, I'm gonna actually show you, right? So market structure is very simple, right? We are just following the trend of the market. Boom, right? And I'm gonna show you how this works and how you're able to implement it within trading, just this itself, right? So what you want to do when you're observing the markets, right? You want to make sure when you are doing market structure, you're not just doing it from the small time frames, but you want to do it from the big time frames, right? What I personally do, I go from the daily 4 hour, 2 hour, 1 hour, 30 minutes, right? Usually at that time, right, I have a ideal which way the market's going, right? My confirmation is usually if the daily and 4 hour are bearish, right? More than likely the and 1 hour, 2 hour are bearish, more likely the market's gonna go down. And what even brings it to a higher ratio that gives me more confidence is when most of the time frames, usually 4 out of the time frames, are all bearish, right? So here we have a high. Here we have a higher high, right? What then after a higher high, you have a higher low. Anytime a higher high is created, it's going to create a higher low, right? What is the initiative for a new higher high to be created? It's very simple, right? In order for a new higher high to be created, you simply have to break previous higher highs. Very, very simple, right? Boom, higher high. Same thing. Did it break? Boom. You want to break previous higher highs, right? Now, when it comes to the higher low, when do you know if it's still a higher low or if it breaks below? As long as it doesn't break previous higher lows, right? You are still valid for bullish trends. Once we break below, right, we can start seeing a different perspective. And I will show every single one of y'all right after, right? So, boom, higher low, didn't break below. And then we created new highs, right? Higher high, higher low, right? Did we break a new high? Absolutely, we did, right? Now, was the previous higher low broken, right? Did we have a change in character, right? Because all of these higher highs being broken are just breakup structures, right? So we're just following the trend. Higher low, right? So this higher low, was it broken? Yes, it was. So what happens once this higher low is broken? We now are now going the opposite way. So now we are at a low, right? Usually at your low, then you have your lower high and lower low, right? Same thing comes to this attribute when it comes to the downtrend, right? If it breaks previous lows, right, we're looking for new lower lows. right? But if we break previous lower highs, right, simply means that the market is shifting and now we might be going bullish, right? So very, very simple when it comes to market structure. Why is this important? I'm about to show you, right? If we go back, um, I'll, okay, we'll do it. Actually, we'll do it after. We'll do it after. Right, we'll do it after. Cool. Right. We got this right here. Right. Levels times smart money. Right. Number one is market structure. Type of one, if this is making sense so far. That's 110 I tend to overlook. Okay, great. Right. Um, perfect. Yeah, Adrian, bro. It's very simple, right? To miss these little steps, right? And these steps might be the biggest steps to it. So now that we understand market structure, what is the next step I'm looking for? Right? Once I identify if the market's going up or the market's going down, what I identify next is consolidation, right? And this is very simple for me, and I'll kind of explain why. Number three is my breaker structure, right? My BOS. And number four is my change of character, right? The reason that I feel that this is very easy for me to identify now, because it almost took me almost 2 years and a half to see it, right? And it was always there in front of me. Like I always heard coming into trading, like a lot of the traders, like, yo, it just took that like one thing and everything made sense, right? When Orrin Wright sat down with me and he said, bro, I'm gonna teach you trading in 5 minutes, and literally 5 minutes, everything made sense and everything connected. All the things I learned in Smart Money and all the things that were taught in levels, it just made sense, right? So what exactly am I looking for? So if we were looking on a bullish trend, right? Bullish, right? What I would be looking for is the market to be continuing moving up, right? So as we can see, we have consolidation, right? What's rule number three, right? We already know that we're looking for bullish. Rule number three is break a structure. I want to see break a structure, right? Change a character, right? And we're going to leave it right here for right now, right? So change a character. This is what I'm looking when I see the market already. Like I'm like, yo, I'm looking for bullish. I'm already looking, I already know that I'm looking for a consolidation, right? I'm looking for a consolidation that was already made, a break of structure that was already made, and a change of character that was already made, right? That's what I'm looking for, right? I think a lot of people get into their heads too much and they just look for the consolidation when sometimes that the consolidation, break a structure, and change of character was already made, right? You want that's how I see it. I was like, yo, if it's already made for me, why am I gonna do extra work and wait for future setups, right? So as we're going there, guys, what I want y'all to understand when it comes to a bearish market, it's the exact same thing, right? You have your consolidation, right? Break a structure, boom, change a character, right? We're gonna leave it for right here, right now, right? So, what is ideally going on, and how did I mix this in with smart money, right? Because it's sincerely the same thing, right? What I want y'all to understand, most people, and all of y'all know this already. Everyone goes to learn on YouTube. They go, get some, you know, strategy, they trade support and resistance, they trade trend line, whatever it is, right? And the market, as you guys know, right? And if you haven't watched my Infinite Games video, I would highly recommend it. It goes along with the Simon Sinek video we were watching, right? You have money right here and money right here. What is money to us, right? Money in the market equals people's stop losses, right? That's people's stop losses, right? So we have people that trade support and resistance. You have people buying here. Every time it touches this line, they're like, yo, I'm buying, I'm buying, I'm buying, Once it touches up here, they're like, I'm selling, I'm selling, I'm selling every time it touches the line. What the market does, it boosts those people's confidence to make them believe that the market's going their way, right? So it'll give them one play, two plays, and then the third play usually comes down. Does it have to be three specifically? No, it can consolidate his support and resistance as many times as it wants. But what you will see happens frequently before the market continues pushing up, right? The market pushes down to liquidate, right? These buyers, right? Take them out, take their money. Now their stop loss was hit. At the same time, these people that thought that the market was going to continue going up, right? And then the market shifts back on them and they hit their stop loss. Those people that don't put their stop loss or break even because they think every trade's going to go their way, these are the people getting exit out. As well, you have your support and resistance traders, you have your breakout traders, right? Imagine all the people that they see a breakout, they were waiting on a rejection to think it was going to continue going lower, and then it took them out. So what is actually happening here, right? What I want you to understand, what the banks are doing is they're actually manipulating the market to remove people. So what they're doing is they're actually entering sales here, right? The market will enter sales here, right? Either here or here, right? Once they enter sales in the market, these are institutional like banks. These are banks dropping billions, $1 trillion to take these people out. Once they take these people out, what they do then is they buy right here, right? They buy, right? And once they buy, obviously, right? Now what they just did, they took out buyers and sellers, right? But this sell right here is still in the negatives, right? It's still in the negatives, right? So the banks they're probably at break even. They have buys here, and then they're negative. So what the banks will do is then they will now take out either some of their buy positions or sell again. But most of the time, they're going to take some of their buy positions out. And what the market's going to do, guys, it's going to reverse back, right? Why would it reverse back, right? The reason why it would come back is simply because the banks want to break even on their sales, right? These sales that they're in, they are looking to break even. And once they break even on these sales, guess what they're doing, right? They are buying more, right? They just finessed everybody, right? And they're buying more, right? That's how you basically how I trade. Now, let me get a little bit more in depth. You're like, yo, it can't be that easy, right? Same thing when it comes to, right, the vice versa for sales, right? Instead of selling, they're buying, right? They buy here, right? Then they sell, and then they take out positions. They go back to break even, and they sell again, and obviously go into profit, right? So, right, after the change of character, what is usually next, right? And this is something that I've actually never dropped before. But what's next is your entry, right? And my way of entering is usually smart money, right? The change of character, most of the time, I want to see an institutional candle, right? So when it comes to my entry, my main priorities are very simple, right? Is number one, you can use a head and shoulders, right? I always look at head and shoulders, right? Once I see the head and shoulders, cool. I use the fib, right? My Fibonacci, right? My sweet spot is the 786 and the 886, right? That's just my sweet spot, right? So what I will do, right? I'll grab the fib, I'll grab from the top, right, where my stop loss is, to the bottom, right? and I will mark up that 786, 886 zone. Boom, just like that. Once I mark it up, my stop loss is always going to be above break of structure, right? So now you're like, well, Gio, if you're doing that on the bigger time frames, right, you're still gonna have a big basically stop loss, right? You're gonna have a big risk, right? So let me go a little bit more in depth when it comes to my entry. So when it comes to be more specific, stop loss at break of structure, right? To become more specific when it comes to my entries, right? What I'm looking for mainly is gonna be an imbalance, right? An order block, and this is gonna be in the smaller time frames, right? So what I will do is I will look at the head and shoulder. The head and shoulder is right here. This is your left shoulder, head. This would be your right shoulder, right? Cool. I would see that first. And then I'll throw my fib on there, right? Y'all see how I have multiple confirmations to see if I'm looking at the right thing. Once I put my fib, I'm like, cool, I have my zone. Now, when I go and find my zone, I go to the imbalance. I go to the smaller time frames looking for that imbalance and order block, right? And simply number 6 is my stop loss at break of structure, right? Very, very simple. Now, when it comes to managing your trades, right? Because what is the point of y'all learning how I trade and what my personal, preference is when you don't know how I manage my trades? Well, I manage my trades very simple. At a 1-on-1, right, my stop loss goes to break even. Once the market moves the as much as I'm risking, for me, that's a winning trade, right? 1 or 2, right? I'm probably looking at like 25%. I'll probably take 25% out. And usually at the 1 and 3, unless it's a swing trade, right? ITP, right? This is mine managing trades, right? My whole goal when it comes to risk reward is always going to be a 1 or 3, right? That's just me. If you're a beginner, a 1 or 2 will probably work a little better for you, right? It doesn't have to be always a 1 or 3. But the reason why I do 1-on-1 stop loss at break even is because hypothetically for me, if the market moves what I'm risking, I think that's a successful trade for me. And number 2 is I came into these markets to make money, not lose money. A lot of traders are profitable until they're not, right? They're profitable until they get greedy, and then they're like, yo, I put my stop loss to break even, but it's coming back. I'm gonna put it back to my original stop loss, and then they get, stopped out, and they're like, damn, like I should have just put my stop loss to break even. This is saving yourself time, energy, and money, right? Trading is supposed to be a compound effect type of thing, right? Can you make 30-40% in a week? Absolutely. Is every week going to be like that? Probably not, right? And if you think it is, more than likely you'll be humbled very, very quickly, right? So before I move forward with overviewing the markets for us, right? Does anyone have any questions? Does this make sense? How do you know when a trade doesn't go your way before hitting stop loss? So that's a great question, Edgar. You don't, right? You don't. You need to remove this ideology of you being right, right? Like, I want you to, like, the number one thing I can tell you, Edgar, and I can guarantee you that you will experience in this market is that you will lose, right? Obviously, you can look at volume, right? You can look at, how much the market's moving. For example, when it came to US oil, like you just see the things from previous things happen, right? So like for me, for example, US oil right here, we were looking at this and just the way that it didn't push below and it continued pushing higher should have been my sign where it's like, yo, we might not continue going higher. But what I want you to understand is you can't control and you shouldn't want to. And I'm gonna, was it TV? You see each other? Oh yeah, right. You shouldn't, and it's a great question, bro. I'm glad you asked that question. But you shouldn't want to like. For me, this is my ideology, bro. Once I'm in a trade, I'm in a trade. If it hits stop loss, it hits stop loss, right? If it hits TP, it hits TP. Because I want you to understand, you have no control of what the market's gonna do. You can only have control of following your plan, right? If you followed your plan and your trade hits stop loss, that's a win for me, right? Because I was able to follow my rules, I was able to be disciplined, right? And not maybe overtrade, over leverage, and risk properly, right? And on top of that, the next thing that, the last thing I kind of want to go over before we go into these charts, risking properly, right? Your risking risk management plan. What is your plan? How much are you risking for trade? Right? How much do you have in your account? Right? If you have $1,000, right? I barely recommend you trading, right? Risking 2% a trade, right? Maybe 2% a day, right? Because the ideology when it comes to trading is it's like if you're gonna risk 2% a day, it's gonna take you 50 days to lose, right? But hypothetically, if you use your strategy and your strategy is even a 50% win rate, you can still come out winning, right? Risk 2% to make 6% a day. That should be your goal, right? That should be the goal. Once you make 6% a day, you stop trading. A lot of people, they continue trading. If you lose 2% in a day within your account, you stop trading, right? This is where these little mistakes start happening, right? But great question, Edgar. But my reasoning when it comes to when do you know it will hit stop loss, right? Um, Over time you'll be able to see things in the market and not like how pretty much price action is moving, right? So if price action is still pushing higher, volumes pushing higher, there's more buyers than sellers. That's something that can tell you that. But for me, bro, like I said, it's like, yo, if I follow my plan and this was my trade and there's nothing wrong with it. It was 100% right. I did everything I needed to. I followed all these keys right here. Then me personally, it's a winning trade. Yes, it's a losing trade, right? But you have to change your mindset. Instead of, because I promise y'all, all of y'all in this call today, y'all see winning in trading as making money, right? And I'm not saying you're wrong, right? But what I'm saying is the second you remove the money out of the picture and you understand that the money's already there and you focus on the skill set, the strategy, and following your plan, right? It's gonna be a matter of time until you receive the money, right? But if you're always chasing making $100 a day and you only have $100 account, you can continue chasing and it's going to continue running away from you, right? So this is why I overviewed this with y'all because I know a lot of people are missing these important spots and keys, right? And you haven't really stepped into that next level of being a professional trader, right? There's a difference, right, with a trader and a professional trader, right? You're wanting to make 6 to 7 figures in this industry. You have to understand it's like what does it take to be a professional trader? And professional traders understand that it's a game of probabilities, that there will be losses, right? But the odds are more in our favor if we just follow our plan, right? So, any other questions? But great question, Edgar. That was a really good question, though. I'm actually glad you asked that. Any other questions before we move forward? And I show you an example of what exactly this looks like, right? And then we will go over the markets. So it looks like we don't have any other questions, right? Remember, closed mouths don't get fed, right? But, right, so let me show y'all the example, right? Sunday, we were looking at gold, right? And as we're looking at gold, here we have a higher low, right? We have a higher high. Higher high, higher low, right? Higher high, right? Did we create a higher low? Yup. Boom. Right? Did we create a higher high? No, we didn't. Right? Did we break previous lower lows? Yes, we did. Right? We absolutely did. Right? So once we break lower lows, right, this is now considered a low. Right? Boom. Then did we break previous high or whatever this was? Higher high? No, we didn't. Right? So this is considered our lower high. Right? Then we have our lower low. And I trade with the trend, guys. So what I did, I went to the smaller time frames. I'm like, oh, okay, cool. In the 30 minutes, we can see this consolidation in the bigger time frame. We didn't break below it till here, right? So for me, hypothetically, it didn't make sense to aim for this higher spot because once you create a lower low, hypothetically, you want to create a what? A lower high, right? So here we had our lower high, right? What was beautiful about this, right? We had our consolidation, right? We see where market liquidated out the sellers, pushed up. And what's very key for me when it comes to these type of trades, I want to see these institutional candles. What is this? Can someone in the chat tell me what this candle is telling me? Yes, Sergio, this will be going on YouTube. Can someone tell me what this candle is telling me? No? Cool. Right? This candle, what it's telling me is that we had institutional sellers right here, right? This is a perfect example of it, guys, right? This is an example of banks selling, right, to take out all these buyers. And why do they think it's continuing buying? Because overall, gold is crazy bullish. We're at all-time highs. So what's happening now, right? We had a lower low. We throw our fib on here from the low, to the high to the low, right? It gives us this zone that I marked up. Boom, right there, that's 786, right? We remove that. What I did after that, I went to the smaller time frames. And remember, what am I looking for? I'm looking for imbalance or order blocks, right? Here we have an order block and we have an imbalance. As we go to the 5 minute, right? What exactly intrigued me about this one, right, was like, okay, this was filled, right? I like here, right? So this was my zone. If we scroll to the right, you can see the market absolutely tapped it and just rejected. Was this a coincidence? I don't believe so, right? Now, this is just an example of what I just showed y'all looks like and what we're looking for, right? Boom, stop loss right there. This was a 1 of 4 that we absolutely smashed, right? So now, let's delete all of it. Let's start now looking at the markets. Now that you've seen how I trade, right? And number 2, right, you've seen an example, right? So that's pretty much the ideology of the way I'm trading, guys. Obviously, if you want to learn more, hit me up, ask any questions, and I'll be able to pretty much help you more in depth.